Alrighty. So, I know it's been a while since I've pretty much posted any source of content on my YouTube channel. So, this is pretty much a video that I wanted to make for you guys, going over the delivery for Friday, which was our last market open from last week. Before we go off and go into this new trading week, since it's currently Sunday, so market's gonna be opening back up in roughly 3 hours and 30 minutes from now, or is it yeah, 3 hours and 30 minutes from now. So 6 p.m. Market's gonna be opening back up, and these levels, price, things of that sort. It's probably gonna change. Might be some opening gap, things of that sort. Might come up, push up, or maybe shoot all the way down. Who knows what that open might do? But I'm just gonna be talking about the initial delivery of where the market displaced itself at 9:30, and then of course a little bit prior to before, because how else was I able to come up with the thought process behind how to catch, see, and capitalize on some exposure here of this handle, from the daily, the weekly, the monthly, trading in fractals. So yes, the ranges are very drastic depending from what time frame you come from, which in a sense can make your risk, very heavy, and your rewards very huge. But there are ways to, properly fine tune that risk and make the trades manageable, and still be able to get in sync with the higher time frame delivery. And with you understanding fractals, you start to, understand that there really is no time frame that is better than the other. All of these executions, these things that I am seeing are, being executed on a 5 minute, as lowest as the one, just whatever time frame that the structure becomes very clear to me. That is the time frame that I am entering in on. So you can, pretty much take away whatever it is that you need to take away when it comes to, visualizing and internalizing these markets. Uh, I'm going to go into pretty much what it was that I was seeing, um, to catch this short here for NASDAQ. And I believe the other indexes as well dropped. So same things that are being done here will pretty much correlate to those other assets. I'm just not talking about those other two for this video. But this was about a from entry. This was about a 415 point drop that I called out on live. It's recorded. It's posted on my page. Um, Trying to teach you guys how it was that I was able to gather the thought process behind this entry. Um, Again, I'm sure most of you know that I do trade ICT concepts, so I do utilize institutionalized concepts, order flow. Primarily, the only two things that I'm using is just time and price, and order flow concepts, which is everything that I learned from ICT. Um, Before this, learning ICT concepts like years ago, um, you could say in the beginning stages, I was trading retail concepts in a sense, supply and demand, uh, support and resistance, at least thinking about it in, retail terms, and trend lines. Um, I pretty have, yeah, I have an extensive background when it comes to trading. Pretty much utilized everything uh, when I was, learning Forex. I don't think there isn't any type of concept or approach or strategy I haven't really used. It was like RSI, Bollinger Bands, um, harmonic patterns, all sorts of stuff that I was learning back then. But I started trading ICT concepts for, let's say, like 4 years now, roughly. Maybe like 3, 4 years. I think I started learning about ICT back in like 2020. Yeah, I want to say 2020. That's when I heard about ICT. and started learning his concepts, and I've been trading them ever since. So yeah, I've been trading his concepts for probably like 4 years now, six. Besides of the time gap that I took off charts, so I'd probably say about 4 years of actually applying his concepts and using them in real life markets, and 6 years in total. Um, if we factor in my gap from taking a break from trading, but that's not a discussion for this. Um, go over the initial delivery of pretty much what range I was eyeing before we actually fell. Now, since I trade price in the form of fractals, I already have a understanding that a lot of the times that these highs and lows uh, that pretty much create our turning points away from the marketplace a lot of the times can be some key high or low off of the 4 hour, the daily, in a sense, the 1 hour, 30-minute chart, 15-minute chart. It doesn't matter. These highs that are established here are usually highs that are also established on a higher time frame. Sometimes that can be the sense, or sometimes it could just be the rippling of price in between a candle's range. So pretty much what I do is I understand my PO3s. I understand how to visualize these markets from a higher time frame perspective, and what exactly I am looking at in terms of a price fractal on a lower time frame. And then from there, I just apply the simple concept behind, what does price do when we trade above old highs and old lows. When you think of these things in the sense of liquidity, you know that the market gravitates above an old high and old low, in this sense, and we do something here. Price comes up and it draws in between the pink end, higher end and lower end of this range that's being identified in this pink shaded area, and it seeks these resting buy stops. And once price, gravitates up there, you start eyeing other little things like, fair value gaps, things of that sort. But really, yes, I'm internalizing and visualizing these things, but you're really looking for the sweep, and factoring in, that concept, and just understanding about, order blocks and ranges and fair value gaps and the importance of those things. You can start visualizing where that candle's next fractal, whether it's the next 5M, 15-minute, next hour stick, when this candle opens at 9:30, that is coming from that higher time frame, and then you're seeing exactly where it's trying to go um, on the lower. And that is the whole thought process behind how you gather these entries. From there, it's just order flow approaches, fair value gaps, order blocks, consequent encroachment, CE, the midpoint of these order block ranges. Same things with fair value gaps, they pretty much tie hand to hand. But in a sense, these areas can become high prioritized magnets uh, within a range to where you can expect some type of trade reversal in this sense to set up and to, of course, give us the direction of the marketplace that you're looking for price to trade into. If the higher time frame is screaming for us to go lower, everything on the higher is being represented as bearishness, the 4 hour bearish, and I'll cycle through those time frames here, but the daily stick bearish, the 4 hour bearish, the 1 hour time frame bearish. Everything is just bearish. So you're trying to get in sync with that higher time frames, PO3, OHLC on the lower, and drive along with it going lower. So that's the whole thought process behind how I'm doing it. Now I'm just gonna simply just go in depth behind the trade idea until trading into my levels that I was looking for to trade into, and from there it was just a very quick and simple delivery to the downside. So moving this to the side so that won't be in the way. At one point in time, the market was just resting here. You don't see any of this delivery that's now in hindsight. So a lot of the times when I am teaching individuals how it is that I'm doing what I'm doing, I like to gray these things out because I don't want people to see the. Let's bring it to the front. I don't want people to see the after hindsight of price and not understand the before in order for us to get to these areas because the move is happening, before you see it. So the whole job behind this is for you to be able to anticipate, where the move is forming so you can get in sync with it into the levels that you are dreaming or calling for price to trade into. So that is one of the things that I do like to do is just take that portion of price away and not worry too much about how did we get, under this low here in this shaded area, and of course to this monthly slash weekly level that was resting here at 23,490. So just let's pretend that this isn't here and we're just focusing on the initial delivery to get down to 23,490. So that's how I want you to think about this piece of price action here. Believe that it doesn't exist for the current moment. Only think about what price is doing from midnight all the way up to 9:30 in the morning, which is the opening of the New York Stock Exchange, and this is where we're in that prime time of our tradable window or looking for trade opportunity once market structure sets itself up and things of that sort. So one of the things that I noticed was that at 9:30, we were already trading above this short-term high here and wicking into it. We created this lower high here, price stabbed against it again, and then went up one more time at our open of 9:30. Took those buy stops and then priced in this high here at 23,644.25. Once this high of this candle was priced in, you're pretty much internalizing this as being the open or the high of that 30M candle, the open, the high of that 15M candle, and this is the upper proximity of that candle's range. So if we created the high of the 30 and price is below the New York Stock Exchange open, that would represent that, at this current time or within that 30M candlestick, that 15 range of structure, that price is pretty much bearish below this open, which is why you're looking for shorts. I'm just trying to keep it very simple, simplicity. That's the best way to be able to teach people how to understand these things. I know ICT can ramble a lot. My job is to pretty much try to break that rambling down and make it understandable for people who don't understand what it is that he's teaching. So after the market opened here, we created a huge candle of displacement at 9:30. Just in this candlestick alone, it had about a 50-point range. So that's a very meaty candle on the M1, sending us lower. And of course, we traded all the way down to what initially was data lows. The whole concept behind PO3s is pretty much trying to teach people, or trying to teach you guys how to, let me take this away, how to internalize a candle's structure. So when we're creating these structured legs of price, and you're looking at price on the lower time frame, you're seeing the inner ripplings of that candle. So if I know again that this is the high of that 30-minute candle, that means if I was to go to the 30-minute chart, that would be the same high on the 30-minute, which would be here. And I'm looking at that structure on the 5M, on the 1M, and I'm knowing where I'm at when it comes to me being in line with that 30-minute candle. Price is below the open, we're bearish. You look for a continuation of shorts if the candles are going to continue to go down. Initially, that's how you pretty much think about it until we get down to our level within that 30-minute, 1 hour, 4 hour candlestick, of course, pacing itself down. So Fractals is definitely something that I would say to have a complete understanding of, so you know how to capitalize on these moves when you do see them. So what I will do is add the 30-minute candle time frame here and just show you how these levels and things of that sort line up. So I'm looking for the 930 candlestick, and that would be here. So just hovering over this candlestick, if you know about OHLCs, when you hover over a candle at the very top left hand side of your top step chart, I mean, it's TradingView, powered by TradingView, but it's on the Project X platform. So hovering over a candle, such as the one that I'm hovering over right now on my 30-minute chart that's on the right hand side in this very small delineated window. The high that comes in for this candle is 23664.25, and that is the same high here that's on the M1. You see what I mean? So if price is creating that high on the M1 and we're bearish below, that means that this entire candlestick range that's being made on this M1 is the initial delivery of the higher time frames draw. So once you start understanding structure and identifying the key levels within the range and tying order flow into it, you can start to pinpoint optimal trade entries within these ranges and literally trade in sync with the market's bias until it gets to where it's trying to go on a higher time frames draw on its liquidity. And this is literally how I'm able to have the possibility of catching a lot of these crazy RR trades where you're risking like 35 points on one end and on one opposite end of the handle, and then you're able to aim for like 202, or just keeping it aware of the levels I was looking for, 156 points on the target. And then on the very second target that was here at 23 286 0.50. So let me make this visible on the current interval and below, but these charts aren't synced, so I have to copy the coordinates off of here and then paste it on here, and then just draw the short position to it. So about 156 points, but the full target for the trade that I called out was about 360 points. So seeing that entry and knowing when to get in, this is literally a 1 to 20 RR with 17 points of risk on the opposite end. And then of course this really depends on where you get in at, because yes, that was one of the first optimal trade entries. There are other entries that you could utilize to get in sync with structure. It doesn't have to be here. You could have traded 930 and waited for the break and closure below, changing in trend direction or changing state of delivery, CISD. And once you have the confirmations for that breakage of structure and then the volume, of course you could have just took the initial leg going down, gathering into the sweep, and been looking to exit or close once you've seen any form of rejection in the lower end of this candle's range here that pulled back at about 936 and created the draw going higher within the 930 candle, which is back here. So that's pretty much that draw going lower within the 930 stick, and then the market retracing within that range. But the only way you'll ever be able to see that is if you drop down to the fractals within that range. So me knowing where this low is at, which is at the 936 candle, but this low created this coordinate here for our level of support at 23,531.50. So looking for that 23, what it was, 23,531.50. I'm pretty much looking for the low end of this candle's range. That was for this pullback. So 30. See if I can find it on the 15. So same thing, because these charts aren't synced. I'm gonna just copy the coordinates from here, paste a line here and get it to just magnetize to whatever that candle low is, so you guys can understand the fractal of that low. So that's pretty much this here, this 15-minute low. Let me see if I can see it on the 30. Okay, bet. So it's, as I was saying, where sometimes it's the rippling within the range that creates the structure. So you won't see it until you drop down on a certain time frame where that candle structure can be read. So this is pretty much the pullback, the retracement, the correction of that 15-minute low being shown here on the M1. And then of course you would see it on the 2-minute chart, same low. The 3-minute chart, same low. The 5-minute chart going on, so on and so forth. So that's pretty much, how I'm internalizing the ranges, to know where exactly I need to be targeting from a higher time frame perspective. The levels that were being targeted were the monthly, weekly levels because they pretty much coincide. They're the same low. So you could see that easily if you just got an individual chart, such as I'm doing here, and just going to, the 1M, the monthly, and you can see, that is the level on the monthly here. And of course, that other one for some reason is not showing here, but that is that other one as well. Let me go to the time frame that it's on. That 23,286.50. So let me put this visibility for this to show on intervals and above, and then go back to that daily, and then you can see it. Now that's the low on the daily, the low on the daily as well, and then it's also, these two individual separate week lows, one from June 30th and then another from July 28th. So those are the levels that we ended up trading down into, from the weekly, monthly, 4-hour, daily perspective. That is how we get to these levels. It starts in understanding the fractals, and then of course institutionalized order flow. So now that I went over that concept, I don't really need the second chart anymore. You can leave that for food for you to study. Now I'm just going to go over the trading approach behind what it was that I was looking for, and what it did after. So after we went ahead and created our opening range, the high end of that 30-minute stick, and then of course the displacement going lower, and then sweeping what was originally the data lows, in that pool going lower, you see at times where the market will stab into a previous resting liquidity pool under an old low, and we have some type of internal flippage or structured pull back away, after sweeping the old low. Sometimes it could be a drastic range, such as this one, for about an extra 43 points before actually flipping back over. Sometimes it could be a very quick little stab going higher, such as this move here, trading above that high for about 2 points, and then it flipped. So it can vary, but in that understanding, that's why you have to be able to back test these things, understand how it can work, and then of course be able to forward test these things as well, because this is what's going to help you build upon how you catch these top ticking pitch perfect entries. And even if you don't catch top ticking pitch perfect entries, you still understand how to get back into that obvious draw that you're looking for the market to trade into. There's certain conditions that have to be met first before you see those moves attacking the opposite end. So very quickly, because I don't want the video to get too long, you can see the orb on the 5-minute time frame, that consequent encroachment that's being mapped on the lower, and what we did to create the CE, that optimal trade entry within the equilibrium point of this range. If you were to draw a fib, you can easily do that, finding that 50%. Or you could do what I do and just hold control on the keyboard, use a zone to mark off the open and close of the candle, and then put a midline on the zone, and then you'll have your consequent encroachment. So if it trades back into that, it could be used as a magnet, in the sense of where you can see the market trade back into a level and expect a reversal or a continuation in trend to unfold. It's about as simple as I can put it. But from there, you've seen how the market react from the orb, fair value gap, things of that sort. It didn't even respect it. It drew higher into that optimal range. Um, and again, with you knowing how you trade ranges, this high and this low here within this range. So forever, the market is always going to be trading internally, externally, back into other external levels, internally from another range, rinses and repeats. But this is, one fractal of a range within a range that we identified from a higher time frame that price is trading within before it truly expands out of the range and then trades lower. If you know, you know. But seeing how the market created this high of this range and then made this low and then retraced into optimal trade entry within our order block that's being identified on the 5 minute, and we just fell hard. Market never came back to entry, and from there we just continued to drop, trading down into the monthly level, and then of course the one all the way down here, though it's not on this chart, so it had to been marked in this blue level here, but all the way down here for about 360 points on the draw for the lower end of the daily stick candle. So everything else that happened after 9:30 going off into lunch hour, I didn't participate in. I took my trade in the AM to, of course, the levels and things of that sort that I was looking for it to trade down into until it got down here to 1045. When it made that low at 1045, see how it traded down into that level at 115, and that draw on the down end was taken as well. So structure just continued to just keep panning out, going lower from where my initial entry was, and that's what it should do if you are bearish. On a higher time frame, is it should go lower. That's what the candlestick does. So other than that, um, I hope you guys were able to, take something away from this. It was a pretty good video, a little short introduction to what it is that I'm doing and still doing. I will be posting some more content and things of that sort on here, trying to be a little bit more active. So please stay tuned for that, and I'll talk to you guys later. Be safe.